Our guest today is Lee Qian, manager of the Baillie Gifford Positive Change Fund. Lee, thank you for coming into the studio.
Thank you for having me.
Baillie Gifford is a high-profile backer of Tesla, and your fund is no exception. It's about 4% of the portfolio, but it used to be more. So have you been selling shares in Tesla, or is this reduction in your position just a result of the shares falling in value this year?
It's a combination of both. So we have been reducing our Tesla positions and sold some shares earlier in the year when the valuation, in our view, was very demanding. So we took that opportunity to reduce Tesla holding and redeployed the investment elsewhere. More recently, with a declining share price, that have also taken the position down as well. So it's both factors. And
why do you still like the company? It's a top 10 position. Why is it there?
So we think that Tesla plays a very important role in helping to address climate change. First, by electrifying transportation and enabling more people to drive electric vehicles. The role they have played in increasing the appeal of electric vehicles through engineering, and also decreasing the price of electric vehicles through economies of scale and manufacturing efficiency. That have opened up the opportunity for more people to drive electric vehicles, and that has an environmental benefit. But on top of that, Tesla plays an important role in energy storage, and through battery. Tesla Megapack are used increasingly by grid operators to balance the fluctuating generation of wind and solar energy. So that plays an important role to allow more green energy to be added onto the grid. So we think there are multiple areas in which Tesla can help the society from an environmental perspective. At the same time, from an investment perspective, the penetration of electric vehicles is still low. It's single digits in most countries. We think that will increase over time as costs continue to come down and people becoming more conscious of climate change. So we think the growth opportunity is strong. At the same time, the competitive advantage for Tesla is very strong as well. We've seen profitability coming through at an impressive level, and we believe the company will generate very attractive profit growth over the long term.
And there has been some controversy about Tesla's ESG, environmental social governance rating, linked to its workplace practices or sourcing minerals from some parts of Africa.
Yeah.
What do you think about that, and why does it deserve a place in your Positive Change Fund?
So we analysed those ESG factors closely, and we looked at the battery supply chain. We looked at the worker treatment. Our ESG analysts have even went out to visit and seen the changes the company have put through in health and safety in the factory place. And we have engaged with the board numerous times on governance issues as well. So we do consider those carefully. But at the end of the day, we invest in Tesla because the benefit of its products on society, the fact that more and more people are able to drive electric vehicles, and that impact on reducing CO2 emissions is very significant. And for that reason, we continue to own Tesla in the portfolio.
Elon Musk is the chief executive. He also runs SpaceX and now Twitter.
Yeah.
So are you concerned that he's being stretched too thin by managing 3 companies, not just the one that you invest in?
Yeah, it's something that we are actively considering, and frankly, the Twitter situation does raise concern for us, and we will be engaging with the company on that issue. I think that could turn out to be a distraction and potentially a bigger distraction than maybe the company or Elon Musk himself realize. It's one thing to engineer rockets and cars, quite different to manage a social media platform and try to keep everyone with polarizing views all happy at the same time. So that could be quite a big work. So it's something we do actively consider and monitor. One thing I would flag up is Tesla as a company is much more advanced than it was 3-4 years ago. It's now profitable. It has a very clear structure in terms of manufacturing and a roadmap for increasing its production capacity. So we think it's at a much more mature place that arguably means that even if Elon Musk spends a bit less time on it, the company can still function very well.
And are you engaging with the company? Would you like to see him maybe appoint another chief executive of Twitter so they can focus on Tesla?
I think the reality is Elon Musk will do what Elon Musk wants to do. So I think there's a limited room for us to influence him directly. But what we can do is engage with the board and make sure that the board is up to speed in terms of talent and senior management within Tesla. So within areas that the board can influence in terms of making sure that there is a good pipeline, there's a good succession plan, there's good people with operational and manufacturing backgrounds at the senior management level, those are the type of conversation we will be having.
Healthcare is the biggest sector that you invest in. You own Moderna. So why do you like that stock so much? And what other healthcare companies do you own and why?
So we like Moderna because it's have a very strong position in mRNA technology. So this is a relatively new way of producing treatments and therapeutics, leveraging on messenger RNA. It could be a very interesting opportunity because with mRNA, companies can make therapeutic much faster. We have seen with the COVID that both BioNTech and Moderna was able to engineer a COVID vaccine at record time. mRNA has the opportunity to open up a whole range of treatments and therapeutics for diseases that previously have been very hard to target with older technologies. So we think there's a very large opportunity. At the same time, we have been impressed by the management team, its execution with COVID vaccine and the ability to ramp up manufacturing and delivery from essentially a standing start. It's very impressive. The culture, the very high speed of innovation and the strategy of the company give us feeling for excitement about its long-term prospects.
And what other medical challenges, diseases could Moderna feasibly solve in the next decade?
So within the next decades, there are more infectious diseases that Moderna can target. So it's coming up with a better flu vaccine, which is still a huge cause of death, especially amongst elderly every year. And there are other respiratory diseases that Moderna is targeting. And it's also advancing progress in areas like personalized cancer vaccine. The Merck, which is one of Moderna's partners, and that Moderna is partnering on personalized cancer vaccine, has exercised its right to advance one of the candidates, showing confidence in Moderna's approach. So there are a number of therapeutic areas that Moderna could address over the next 10 years.
A cancer vaccine,
Yes.
How might that work? How probable is it? And if they do manage to pull it off, what does that look like for the business in terms of ultimately profits?
I think it's still early stage. So I think it's in phase 1 and phase 2 trials at the moment. But it's a hugely exciting opportunity. And with personalized cancer vaccine, a patient will get their tumor sequenced, and the company will design an mRNA vaccine that will trigger the body's own immune system to create T cells that will attack the cancer cell. So it's very much to help the body engineer itself, help the immune system develop a way to attack cancer, rather than relying on chemotherapy or other very strong treatments that have very strong side effects.
And for the company, what would that mean in terms of its bottom line?
That could be transformative. Hundreds of billions of dollars are spent on cancer treatments every year. And even if Moderna take a single-digit percentage market share, that would transform the business revenue and profit. So it could be hugely impactful.
You're also a big backer of semiconductor companies, so ASML and TSMC. These companies are very much linked to Taiwan, and there's geopolitical tension there with China. Do you focus on the geopolitics, or do you just look at the companies and think these are brilliant, we want to own them regardless of what could happen?
I think it's very hard to avoid geopolitics nowadays, and especially for a company like TSMC. And semiconductors have always been political. If we look at its history, and the government have always played a very strong role. So I think with TSMC in particular, the potential geopolitical risk is something that we incorporate when we look at the business fundamental. It's one of the factors we consider, but we also focus a lot on just the competitive advantage, the long-term growth opportunity for the semiconductor industry. And in those areas, we continue to be very optimistic about TSMC.
You avoid big technology companies. There's no Apple, Google, Microsoft, Facebook in the portfolio. So why is this?
So I think for the big tech platforms, there are questions around the impact on society. There are definitely benefits. Google opened up a wealth of information for people to access. The Android operating system powers more than 2 billion smartphones around the world. The majority are in emerging markets that are helping people to access mobile finance, mobile healthcare services. Those are incredibly powerful and beneficial. But at the same time, there are also quite considerable negative consequences with technology, and especially social media, around the problem of social media addiction, around the fact that people tend to get a more polarized view over time, and social media and technology most likely play a part in that trend. So overall, we don't feel that those companies fit within our impact philosophy in terms of really addressing a social or environmental challenge.
As we head into 2023, there's a lot to be worried about in the investment world. Can you give me a reason to be cheerful and a reason to be fearful?
Well, I think there's always reasons to be fearful. I don't think 2023 is new. Every year there are people worry about certain things, and sometimes they happen, sometimes they don't. I guess it's not really for me to predict exactly what disaster might happen. Reason to be hopeful. There are increasing awareness of climate change, and this is not going away. And there's increasing awareness by governments that climate and energy and healthcare and food, they are all really interrelated. An environment where climate change accelerates and flooding and droughts become more common, wildfire become more common, that will be an environment where food will become more scarce, energy will become more scarce. As people realize that, I think there'll be greater focus and willingness to invest in renewable energy, invest in technology that will help us to overcome climate challenges. So that is something that I'm excited about. It might happen more next year, it might happen the year after, but over the time frame that we invest in, over the next 5 to 10 years, I am quite certain that we will see increasing effort to tackle climate change. And I think that will benefit a lot of the company that we invest in for positive change. In terms of reason to be fearful, I think geopolitics is probably the big risk. There are continued concerns around actions that might lead to conflict in Europe and in Taiwan, as mentioned. That is something I think is a known unknown, and we don't know exactly what might trigger that, but we know the risk is there. So it's something for us to consider and take into account when we are thinking about probability of different scenarios that might happen in the future.
And finally, the question we ask all of our guests, do you personally invest in the fund?
Yes, I do.
Lee, thank you very much.
Thank you very much for having me today.
And that's all we have time for. You can check out more insider interviews on our YouTube channel where you can like, comment and subscribe. See you next time.